everyone. Dave Dubeau here with another episode of the Property Profits Real Estate Podcast. Today, this good-looking guy zooming in is Mr. Kent Ritter. And Kent is a former corporate guy, management consultant that got into real estate investing in a big way. He's doing some very, very cool things with multifamily investing, specifically focusing on social impact investing, which we'll get into what exactly that means in a minute. He runs an amazing podcast called Ritter on Real Estate. Kent, welcome.
Oh, thanks so much, Dave. So happy to be here today.
So, Kent, where are you zooming in from today? That's a lovely backdrop you got going on there. And I'm amazed it's as quiet as it is because I think you got a house full of kids.
Yeah, I sure do. Well, I'm calling in from Indianapolis, so right here in the heart of the Midwest. Mm-hmm. And I've got three little ones, a 5-year-old, a 4-year-old, and a 2-year-old. So I have very strategically planned my podcasts for when they're off at school and daycare, because otherwise, I'm in the basement right now, and all you hear are the pitter patter of little feet running around all upstairs. So it's got to be strategic about it.
Awesome. Very, very good. So Kent, why don't we start? We want to talk about two things here because before we pressed record here, I was asking what you'd like to focus on, and two things really popped out for me. First of all is social impact investing. I mean, we've heard of this. It's kind of a buzz term right now. What does that mean to you?
Yeah, really good question. And right, it's such a buzzword right now. I was reading in the Wall Street Journal how there's so much money out there seeking quote unquote green or social impact investments that people are just starting companies and calling them something like that. And they're just getting hundreds of millions of dollars thrown at them because these organizations now have missions to invest socially, right? Which I think is, which is a good mission, right? But at the same time, some of the ways that it's working out, I don't think really is the most going to have the most social impact.
Right.
But so kind of a side note, what it means to me is that, you're in whatever you're doing, you're making it better than when you found it, right? You're improving whether the world or your neighborhood, or, it can be big or small, but you're improving something and making it better for the community, right? And I think that what I do and what a lot of us do, which is really what I focus on is buying workforce housing. So apartments that are, where people have an income, a family income of maybe between 40 and 60,000 a year. These are people that are largely renters for life. They're renters by necessity, not by choice, right? They're probably lifetime renters. And when we're purchasing our buildings, they're usually 40 or 50 years old and fairly run down. They've got deferred maintenance, not the cleanest, not the best living situations. And so I really think that there is a positive social impact in what we do, which is buying those properties, infusing capital into those properties, fixing them up, making them clean, making them safer, putting LED lights in, for the parking lots, putting cameras on site so we can see what's going on, right? Setting up, whether it's policing programs or security programs, things like that, making them cleaner, safer, and more modern, and giving these people a place that I think they can be proud to live in. And, I think that simple thing has an incredibly positive social impact. I think by changing an apartment community, you can start to change a neighborhood. And we're not coming in and hoping to kind of kick everybody out and bring a new class of tenant in. When we look at things, we really look at the affordability. And when we're acquiring properties, so Housing and Urban Development in the U.S., HUD, they define you being rent burdened if you pay more than 30% of your income to your rent. And so we look at that very closely and say, okay, well, we want to stay well under that 30%. So when we're looking to buy properties, we're looking at that rent to income ratio. I want to find something in kind of the high teens, low 20s, so that we know that we can come in, we can make our improvements as to improve the community, but we can also increase rents and some fees to add value to our investors, because that's why they're investing. It allows us to make these improvements, right? but keep it relatively affordable, well under that 30% mark. And if we can do that, then it's a win-win for everybody. And so really, I think that does have a positive social impact. And I like to think about it that way. And I'm proud that we're able to enhance these communities.
So give me an example of one of the properties that you've turned over relatively recently. What did that look like before? What does it look like now? And what percentage of the original renters, because I'm just thinking off the top of my head, okay, well, it sounds good, but we got all these people in this crappy old apartment building paying probably below market rents, right?
Yeah.
And then you go in, you're going to have to move them to get the property renovated. How many of them actually can afford to come back? How many of them do come back? I can see the benefit of them doing that, but if they're accustomed to paying X amount per month, and then all of a sudden, even though it's still quite affordable, it's significantly higher.
Yeah.
How are they able to handle that kind of thing?
Yeah, it's a good question. So to give you an example of a recent property, we have a property that's outside of Dayton, Ohio. It's 110 units, and it was really still is the most affordable in the market. I mean, below the market by $150 to $200 from the closest competitor.
Right.
And along with that, though, I mean, there was a reason it was the lowest in the market. It wasn't the best place to live in the market. But we saw an opportunity there to come in, and it's very much a blue collar community. Very, primary employers would be retail, fast food, and manufacturing. And we saw an opportunity, though, to come in and when we did our underwriting, I mean, we were only expecting a $50 rent bump. So, I mean, it's something that's manageable, right?
Yeah, for sure.
But we were able to come in and we were able to improve the property, clean up the landscaping, improve the laundry facility, actually get new laundry machines, actually put air conditioning in the laundry room. There's no air conditioning in the laundry room, which is like if you've been in Ohio in the middle of the summer, it's hot and humid. I can't imagine doing laundry in there. So add air conditioning, add new laundry units. They were 20 plus years old. Gosh, what else did we do? We added some external amenities, and then really just focused on improving the units. Some of the folks had lived there for 10, 20, 30 years, had, and it had never had their units renovated. And so, we were able to come in and we were able to renovate those units, even doing some of them occupied.
Okay, that was what I was going to ask is,
yeah,
how many
being able to come in and
how did you do that? Yeah.
Yeah, exactly. So, there's certain things that are easier to do occupied, but with flooring, you can like have them move their stuff to one room and then you do that room, you move them to the other, and but come in and just improve the property. Other things that we were able to do though was address issues with the sidewalks where there was multiple places that had just become tripping hazards, and grind those down and make those compliant. Fix the parking lot, which sorely needed to be repaved. We added cameras to the property for added security that record, and so we can see what's going on, and just generally kind of just improve the area and improve the landscaping and kind of give people a better feel for where they live and some pride, I think, in where they live. And we were able to do all that while only increasing the rent about $50 and still stay well under the rest of the competitors in the market. And so if you do things in the right way and you do things smartly, you can add value without having to bump rents significantly. One of the other things that we did was we added fiber optic internet to the property. So that's something we're doing in all of our properties, and that kind of blends into the tech thing that you mentioned. But running fiber optic internet to the property, which you may think like on a property like that, how are you ever going to run fiber optic internet? How do they afford that? Well, we're able to do it at a scale where we can offer it fairly cheaply, way cheaper than they would be able to get with their own internet service provider. So it's a benefit because it's not an additional financial burden to them. We're actually reducing their overall financial burden, giving them a better product with fiber optic internet, which is better speeds and more stable connection. And they don't have to deal with the cable company. They move in and we flip a switch and it's on. It's already wired.
And now,
So, we add value in that
revenue
way
source
too.
for you guys as well? Are you charging them for the?
Yeah, and so that's the win-win. Is it's a revenue source for us. It's an additional revenue stream, but it's something that people were already paying for. And
Yeah.
so what we do is we do a market survey and we come in and we charge. I think on that property, because we knew we wanted to make it affordable, and our numbers worked. I think we were $20 under the market for the cheapest internet that was available in the market, but we were also giving like 250 megabits up and down speed, so much faster. So better product, cheaper price, try to make it a no-brainer for people. And it's a win-win because it actually lowers their financial burden, but allows us to shift some of that revenue from the cable company over to us.
Exactly. So I was just kind of wondering, for these kind of properties, in order to, increase the value of the property, a lot of times that's based on net operating income. But if you're bumping up the rent $50 a month, that's significant. But it's on 110 units, that's pretty significant. But compared to what gentrifying that building might look like or something like that, is not as much there. But if you're doing these kind of different things with adding additional revenue streams, is that how you're able to bump up the value of the property overall?
Yeah, that's right. I mean, I really believe in trying to add like value add amenities or revenue generating amenities, and doing that in as many ways as we can. I think the internet is a prime example of that. You can only push rents so much. We knew if we pushed rents up too close to the competitors, we would start to lose people. So, and we wanted to we knew that we could come in and we could find a nice balance. We could leave it relatively affordable to the market. I think it is the most affordable in the market, but also have opportunities to add other items like the internet, for example.
And lower expenses by making things more efficient as well.
Yeah, and we also put a laundry contract in place so that we get revenue from the laundry. Previously they had their own units. They were old, outdated, coin operated units, and we put a laundry contract in place, and therefore we're able to get brand new units that you can operate off of like Bluetooth and cards, and and that way we get a revenue share,
but also the maintenance.
Also don't have to deal with it, exactly. And get new units for the residents.
Wow, that's another fantastic idea. Hold on to that thought for a sec. We'll be right back. Now, are you a real estate investor who's run out of cash or credit to grow your portfolio? Are you looking to grow your portfolio using other people's money and raising capital? Well, I want to show you how to raise 6 figures or more in 6 weeks or less at my upcoming Investor Attraction Workshop. You can get your ticket and find out all about it at investorattractionworkshop.com. We're going to spend a full day taking a deep dive into this roadmap that I've used to raise millions for my deals, and I've helped other people just like you cumulatively raise hundreds and hundreds of millions of dollars for their deals as well. So again, you can check that out at investorattractionworkshop.com. And as a loyal listener to the podcast, you'll get 50% off your ticket when you use the discount code PODCAST. That's right, discount code PODCAST at investorattractionworkshop.com. See you at the next workshop. All right, well, that makes a lot of sense. Now, talk to me a little bit about some of the cool stuff you're doing with technology in your properties these days, because that's something you're pretty excited about as well.
Yeah, so I'm happy we already hit on the high-speed internet, because that's kind of the backbone for everything else you want to do. You got to have a good internet connection, and so that adds value to the residents, but also allows us to kind of do what we want to do from a camera standpoint and these other things. So one of the things that I think has just been a game changer for the multifamily industry is the ability to have a contactless leasing process. And this is something that we had started working on pre-COVID, but really COVID, forced everybody to figure out how to do things differently, right? Mm. And so we implemented a contactless leasing process. And that was like the first use case we wanted to tackle with technology. And it starts with a smart lock, right? The smart lock is like the literal and metaphorical front door for all of this, right? You have to have the smart lock that you can control with you through Bluetooth. There's other systems to control it. I prefer Bluetooth, but you have that smart lock, and then you layer software over that allows you to control those locks remotely, right? So it adds management efficiencies. The manager can control access to the property without having to physically be there. It's a benefit for the resident because the resident can now use their phone as a key, right? They don't have to carry keys around if they don't want to. They can also give, access to one-time access to friends and others.
Mhm.
And it's a huge benefit for property management because a lot of people don't know this, but like one of the things property managers spent the most of their time on is rekeying when keys are lost. Property manager, a friend of mine, carries a rekeying machine around in his truck because he has to do it so often.
Right.
So we're able to just eliminate the need to do that by being able to just quickly change the code on the lock via an app. And so that saves a ton of time. And then from
I'm so
there,
sorry, is that for each door in the whole place or just for the front door?
no, each door.
Yeah,
Each door. Everybody gets a smart lock. Yeah.
Okay.
And they're surprisingly inexpensive. Okay, it's one of those things where it can be $200 or it can be $1,200 depending on the grade that you go. But on a C-class property like the one we described, we put a very basic Schlage deadbolt in.
Mhm.
It cost about $210. So not a huge upfront capital expense. And then you have the software fees that are ongoing. It's, a few dollars a door. But well worth it for the management efficiencies and the benefit for the residents. And then from there, we started layering on additional technology to add additional functionality. So we added a self-guided tour option, which allows people to come and tour on their own time, on their own schedule, without having to physically be with anyone, not having to do it on the property manager's schedule, not having to do it when the office is open. We can set it all up, and it's a really cool product. We set it up so you go on the website and you subscribe, or you say you want to do a tour, you pick your time. And then before you show up at the property at your time, you get a code to your phone that allows you to access the property. It's a one-time access code to go into the property. And then as you go into the property, it's actually a curated tour on your phone that allows people to learn all about the property. And there's geolocation beacons on the property. So for example, the fitness center, there's a geolocation beacon. You walk up to the fitness center and it says, hey, welcome to the fitness center. Here's all the great info about the fitness center. You go to the pool. Hey, here's all the great info about the pool. It tracks you through the property. And then when you get to the unit, then it tells you all about the unit. And you can do that on your own. And then you can actually take that all the way through to be able to do a lease, an electronic lease, and sign with DocuSign right there. And you can sign up and get a lease and heck, you can really even move in without ever having to physically contact a person, because then we just give you the code if we really didn't want to have any in-person contact. So it's a really cool process.
That's a huge game changer. Holy crap. That's amazing.
It's been amazing. It's been huge management efficiencies, but also just tenants or prospects, people don't. It's kind of an awkward thing to be shown around an apartment, have someone kind of follow you around while you're looking around.
You can't really talk freely. You can't,
Exactly. We found it's a much more pleasant experience for people when they get to do it on their own, and they can do it, after work. They don't have to take their lunch break and do it. They can come until 8:00 at night and they can tour an apartment. The feedback has been great from people.
Now, I imagine that was already some sort of a process that's already set up that you dialed into, or did you kind of come up with a lot of the moving pieces yourself?
Well, no, we took a best of breed model, which means we found the best one in each category and kind of layered them on together, right? Versus there are companies out there that will do everything from sell you the lock to sell you all the software. But we wanted to look at, okay, well, we want the best lock, we want the best kind of access control, we want the best self-guided tour,
right?
So on, the best virtual lease, those things. So we layered those pieces on top of each other to create that system.
Very cool. So I'm just wondering, for the self-guided tour, who comes up with the scripts? Who does all that kind of stuff? That's quite a bit of work actually to do that well, I would imagine.
Yeah, it's like any technology, the devil's in the details, right? There's one thing to just buy it and implement it, right? There's another thing to really optimize it. And so it is extremely important. So who does it? So really, I'd say, who's your best leasing agent, right? Who sells the property the best? That's the person that you want helping create the script, because that script becomes, your best leasing agent, like with their best attitude on their best day, right? Like doing their best pitch. That's exactly what it should become. And so you work with the people that know the property and are good at selling the property, and you had, okay, well, what are the selling points, right? What do people really gravitate to? And you highlight those things. But yeah, you definitely are working with the folks that know the property best.
So is the leasing agent still required? Is this leasing agent still, it potentially could make their life infinitely easier, and on the other hand, potentially could put them out of a job. So,
Yeah, I think that there's a little of both, likely, if this program is at scale. But I look at it differently. I look at it as, look, the more that we can leverage technology to take away the mundane, everyday, low complexity tasks, right? Then the more that we can focus on our highest and best use, right? The more we can focus on what I would say on a community, the more you can focus engaging with the people at your community, the more time you can spend with the people that live there. You're not worried about scheduling. You're not doing all this. You're not rekeying locks, right? You can focus more on building that community as a property manager, focus more on engaging with residents, and I think have a more human-centric approach, right? Like instead of doing all this nuts and bolts stuff, you can focus on really creating deep relationships, and because that's extremely important on a property. I mean, people will stay places because they like the manager, they like management, and if you can create a positive experience and you can go above and beyond, and you got to have the time to do that, because property managers are pulled in 1,000 different directions every day. I mean, leasing is one of their jobs, right? They have 100 others. So the more that we can limit those with technology and allow people to spend time in front of the residents, creating a positive experience, then I think the more successful we're going to be. So that's kind of how I don't look at it as necessarily we're trying to replace staff. Like we don't underwrite a reduction in payroll and things when we put in the capital to do those. To put locks and things in. I mean, maybe that happens organically over time. We just realize, kind of through attrition. But really what I'm hoping is that there will be just more focus on that resident experience.
No, that makes a ton of sense. I tell you what, Kent, time flies when we're having fun. This has been fascinating stuff. What you're doing with social impact investing and how you implemented technology to just really dial things in. That's absolutely fantastic. If people want to find out more about Kent Ritter and what you're up to, what should they do?
Yeah, thanks, Dave. So the easiest way is go to kentritter.com. That's my home base. You can learn more about me. You can access my podcast, my blog. I've got some kind of beginner investor resources on the site. So very useful, especially if you're just getting started out. And you can also just go directly to anywhere you listen to podcasts and listen to my podcast. It's called Ritter on Realestate. And the tagline is passively invest like a pro. And that's exactly what I try to do, is try to help people who are, looking to make investments, make the right decisions.
Excellent. Ken, thank you so much. This has been a lot of fun.
Yeah, thanks, Dave. Appreciate having me.
My pleasure. All right, everybody, take care, and we'll see you on the next episode. Bye-bye. Well, hey there. Thanks for tuning into the Property Profits podcast. If you like this episode, that's great. Please go ahead and subscribe on iTunes. Give us a good review. That'd be awesome. I appreciate that. And if you're looking to attract investors and raise capital for your deals, then I'm going to invite you to get a complimentary copy of my newest book, right back there. There it is. The Money Partner Formula. You can get a PDF version at investorattractionbook.com. Again, investorattractionbook.com. Take care.